Indians very intuitively understand gold and the role that gold plays, not just as an emotional attachment, etc., is very much there, but the sense of how it is also a part of your portfolio to manage against uncertainty, to manage against inflation, and when you're unsure, what else is going to give you returns. So somebody was saying that it is sort of grandmotherly wisdom passed down even 100, 200 years back, saying when you're not really sure what's happening, just make sure you have gold.
My guest today is Praveena Rai. She is MD and CEO of MCX. In the last 30 years that she has spent in financial services, she's done everything from banking to kind of pioneering UPI and the whole payment systems at NPCI. She's just an amazing person to have on as a guest today. Fantastic to have you here, Praveena. So, world of commodities, the most interesting part of investing markets right now. And you're in the thick of things. In your experience, and you've done various things, including banking, payments, and commodities, how is the world of commodities different from every other aspect of financial life?
Usually commodities is not considered to be easily understood and considered to be part of what you would think of, financial services that everyone needs to have access to. Mm-hmm. And I think that's what makes it more interesting, because it is so fundamental and so core to everything that we do, to the entire economy, to our day-to-day life, whether it is electricity that we use or, all the infrastructure around us, the homes we live in, our office spaces. So right from infrastructure, manufacturing, services. So every part of our world at the core is commodity. So we call it the universal intermediary. And hence, it is natural for it to be part of how somebody has to look at what financial services is all about. So I think it sort of fits there very well, but you have to be fully understood by everybody.
That's an interesting point, because is that understanding because of where we are in our journey as a country? Because if you look at, this is a difficult subject for everywhere around the world. I mean, if you look at even the best developed markets in the world like the US, commodity funds are still seen as a niche, kind of not part of the normal SEC regulated fund structures and so on, right? So there is something about commodities which makes it a little bit different from a investment or a asset management, investment management perspective. Do you think that's the way it will remain, or do you think we'll get more and more integration of the financialization part of commodities into everybody's life?
There is a need and opportunity to drive that financialization. What really will be the end state? Will it become ubiquitous? Will, everybody want to have access to it? Will they have access to it? I think time will tell. But is there an opportunity? Is this something that people should consider as part of their sort of investment portfolio? Absolutely, yes. And, I like to look at the sort of financial life cycle of a person. So if you look at it at the very simpler level, somebody has a bank account and payments. And in India, of course, for us, the big pathway has been that, hey, everybody now has a bank account. Right. And payments has now become, ubiquitous. But from there to say people need to have savings, they need to have, risk management and sort of various kinds of insurance cover. Then they need to have the opportunity to, make investments and get some returns on their money, so that money is also giving, being productive for family. So when we look at this entire life cycle, I think, India is somewhere along this journey. So we moved away from payments. We want to make insurance accessible to everybody. If we look at the markets and investments, that's having a broader, I will say broader participation. Then we start deepening that understanding, saying, how do you build a portfolio? What should a good portfolio contain? And that's where sort of commodities start playing a role. So yes, it is in a slightly more mature part of that life cycle. but it will play a role for
Now,
everybody.
on the one hand, you could say that we are behind the curve in certain aspects. On the other hand, everybody in India owns gold. So, in that sense, we are probably ahead of the world when it comes to at least the driving savings or investments into a commodity like gold. And obviously, commodities, especially gold and silver, have been the story of the last year or so. That would have driven and has driven, in fact, a lot of interest into the sector from investors. Are you seeing that broadening into other commodities as well, or is it just that it's like it's just crowded into bullion and then it just stays there?
So it's a great point you made on gold, right? And I think even when we interact with the industry, whether it is jewelers or sort of the trade that participates and hedges on MCX, I think the predominant sense of what we understand is Indians very intuitively understand gold and the role that gold plays, not just as an emotional attachment, etc., is very much there, but the sense of how it is also a part of your portfolio to manage against uncertainty, to manage against inflation, and when you're unsure, what else is going to give you returns. So somebody was saying that it is sort of grandmotherly wisdom passed down even 100, 200 years back, saying when you're not really sure what's happening, just make sure you have gold.
Sure.
So that sense of the fact that gold will always have that longer term appreciation and return, even when you're not sure what else you should be dealing with. So is that logic, should it be extended to other commodities? Yes. Is it there today? Not yet. But certainly, we are in that journey.
That's great. I'm going to pick up on a point that you just made on payments have become ubiquitous, and you've been really part of that journey at your previous role at NPCI. Can you tell me that you were trying to build that block, sort of building blocks of financial journey? I think an early part of that is just banking and payments. You should have done both. So probably one of the best, probably the best person to comment on both. Are we there in terms of where we want to be on that journey, and are you happy with the way digital payment infrastructure in India is?
No, absolutely. Sivakumar, so it's also wonderful to be here. If I look at where we stand on banking and payments, I think truly we have arrived. We've arrived as in, if you look at criteria of success, it's about reach and experience and suitability. So I think with payments, we tick all those boxes. With banking, we largely tick all those boxes. If you look at everyone having access to some sort of banking service within 2-3 kilometers of where they live, I think that India has come a long way. And it's now something you take for granted, right? That payment just has to work, and it has to work instantly. Debit my account, credit yours. I'm able to pay online, offline, whatever, within seconds the transaction is done. And that has been built on a basis of trust of how the infrastructure works, that it's available. You're confident enough to walk out with just your phone and say, hey, I'll manage my day, right? So that's the ultimate gold standard.
And it's amazing, right? And especially when you travel abroad, you see the difference, that it's so easy to pay here. And it's sometimes quite frustrating to pay in other countries where they're still dealing in cash or otherwise. I think, but that aspect that we've solved, which is we've just leapfrogged cards and checks, before that, etc. We've used all of it, but I think the adoption of digital payment technology has been breathtaking to watch. Is that the way forward for all of this in terms of banking, everything? Is it all going to be digital?
I think absolutely. If you look at a country like India with the kind of geographic spread we have, the challenge of physically reaching, the last pin code, so to say, and the kind of services available today using technology, digital, AI as we speak, I think all of that helps us to create that leapfrog. In fact, markets where penetration and sophistication of financial services is already high, they find it more challenging to really go down that path, right? Because legacy is strong, comfort zone is there, then the incremental benefit is not seen as being positive enough, and a lot of inertia sort of sets in.
I think to take that point a little further, the disruption in payments in the West is happening from the edges. You have non-bank or not led by the sort of authorities, but rather it's happening by digital platforms and eventually sort of getting integrated more and more into. I think what we've done in terms of getting it.
Fundamentally from the core,
right? From core, right? From the core that, and then all banks are there from day one instead of you have as a user having to figure out, which bank app, which this app, etc., that I should be using, etc. I think that's worked really well. And congratulations to you and everybody else at NPCI for having set that entire infrastructure up. And I believe it's going global. So in that sense, hopefully we'll have more countries using same payment structure. That it certainly would help us if we travel overseas, if we can pay everywhere we go. And the bridge from there, how did you? I mean, I'm going to take a little step away from talking about the product or the business to. How did you make the journey from digital payments to commodities exchange?
Yeah, I think I was always passionate about that life cycle I told you about. I keep going back to that. So if you can make an impact in the foundational element of that life cycle, I think there's an opportunity to do the same across all the key segments. And key segments are just three: so banking and payments, the whole insurance space, and then you have markets. So I think that's really where markets, came in.
So you think that this is where the challenge is in terms of developing the markets, especially when it comes to
absolutely. Yeah. And I think commodities is, one aspect of it. It's sort of focused, it is underpenetrated, that's where the challenge is, that's where the opportunity is.
Yeah, it's interesting that you talk about life cycle and development of commodities markets, etc. And even within commodities, I mean, we are used to precious metals. Obviously, that's the number one thing investors think of. Energy is a very big part of commodities market, industrial metal, agri, and so on. But the world seems to be moving into different directions. I mean, if you look at the rise of prediction markets in the US, if you look at, for example, SEBI is considering weather-related. So is the definition of commodities and markets, how broad should we see the sector? And how broad do you think the opportunity is?
Yeah, I think I don't want to really comment on prediction markets. Right. We know that it's happening in some parts of the world. But it's good to keep to the fundamental principles of, the meaning of and the purpose of why something happens. And the commodity markets are meant to provide commodity as an asset class to a certain group of people, commodity derivatives, and then provide hedging to really the industry, where the value chain of managing supply, inventory, and sort of demand price risk needs to be managed. So these are the two, primary participants in the industry. So I go back to commodity as a universal intermediary, right? So it has to be something that is used to create what we otherwise use as various end products. So, you look at copper, you make copper wires, and it goes into so many industrial products. Aluminum, so if you look at, the national electrical grid and all that expansion, it's all based on aluminum. We use iron and the whole ferrous and steel, pretty much everywhere, construction, nickel and, various such metals that are going into a lot of emerging sectors, batteries, solar batteries and EVs and so on. Silver, which we think of as precious metal, 50% of the application of silver is actually industrial, especially in a lot of the emerging sectors that we see today, semiconductors, all of that really use silver. Now, agriculture, of course, is a no-brainer. We eat it. So it is a, it is a natural commodity. In fact, it is probably the easiest to understand as a commodity. And weather is a determinant of, not only just how our agricultural produce works, but it's a determinant, it's a larger economic determinant, right? I mean, when we say the monsoon, we have good monsoons, inherently there is a belief and a data indicator that, we do well as an economy that year. Rural sector, the rural consumption improves when when monsoons are timely and good. So weather should not be confused with some of the other.
So you think weather is at least is closer to agri
It
as
is.
a
It is. Yeah. It is
place
a
yeah.
core commodity, and then there could be various indices that arise out of commodities, which also have a lot of relevance.
Coming back to that indices, and I think it's fundamental for us as asset managers also, or as investors, right? Because you want to see a good quality index so that we can benchmark ourselves, or even to just observe what's happening in that market. I mean, like I said, precious metals we understand, but what is holding back, or why is this just a matter of time before we get popular indices for commodities as a whole in India, or specific?
No, absolutely. Absolutely. I think the commodity sort of index basket exists. There is the Bull Dex, which really looks at gold and silver on bullion. Metal Dex, which looks at the entire metals portfolio, copper, aluminium, nickel, zinc, lead. And then there is energy, which looks at the energy portfolio. So I think it will follow the actual acceptance and success of the indices will follow the maturity of the markets. As they grow, they become more sophisticated, there's more participation, more volume. And we are seeing that in the last couple of years. So I think it's now a question of time.
The core part of this, index building and all that is part of it is also drive investors into looking at this sector and bringing liquidity, etc.
In an easy to understand
manner. Easy to understand way, right? So it's easier for someone to, let's say, trade an index.
Correct. Like they do a Nifty or a
right,
Sensex
absolutely,
today.
Right? It's much easier than to take, if I don't want to take a view on lead. I mean, or I may not even want to take delivery of lead if I by chance have to take. So therefore, I think it's very important to have those indices and derivatives on those indices if you really want to make it more popular. But that also brings me to the question on liquidity in general. Because there is that, I mean, I know that it is many commodities are very, very liquid, even in India. Do you see that? What do you see the trends are there in terms of liquidity, efficiency of the market?
So liquidity, diversity of participation are both super important, right, for the markets to function. And I'll just touch upon something before we go here. So the commodity markets also tend to be very closely aligned globally because commodities are imported and exported. There is always, and of course these days with the kind of economic growth and economic presence of India, our Indian market is also a determinant of that price. So we don't just reflect global prices, we absorb global prices, we look at our exchange rate, we look at our duties, etc. But then there is really the India demand supply component that kicks in. And to make sure this linkage is clean, the market is active for a long period of operating hours. So starts at 9 in the morning. So you cover half the Asian, starting with the Tokyo markets. Then of course the entire Indian market gets covered. Then you're able to look at UK and European markets as they open all the way up to around midnight, covering about half the American market. So that way the price integration to the global prices are also taken into consideration. So with this comes liquidity. Now energy and bullion are two highly liquid sort of segments, and they've really again had significant growth in the last couple of years. So we see that happening on metals also now. I think copper is the new gold, as they say, so it's seen some very strong participation. There are certain other enabling elements that are required for some of the other commodities to hold up and create that kind of liquidity. Do they all have potential? Absolutely they do. And agriculture, of course, we have certain commodities which are not permitted and others that are. So, wherever they are permitted, then we'll slowly start looking at them one by one.
Can we go a little bit into that, so what will it take, for example, for that kind of liquidity which you already seen in energy and bullion to move into metals? And is it just time, or is there something that intervention that is needed to get this far?
So we are at a very beautiful phase of this market growth. So early enabling policies have brought it to this level early participation exists. There is a need for it, which is a certain level of volatility that needs to be managed. Now we need to look at what will drive further liquidity, and that will require some level of enabling provisions as well. So, for example, when we look at ETFs. So ETFs today, gold and silver ETFs are permitted, and of course they do very well. They also do a back-to-back hedge into the commodity derivative space. We as a country have not yet permitted ETFs beyond that. So I think it's about matching the maturity of the market, the need of the market, the maturity of the user and the investor, and we are there today. So there are Indian participants, I think, who are accessing global markets for copper ETFs, for example, right? So we should be having our own copper ETFs.
Yeah.
And today we have a liquid market.
From your lips to the regulators' ears. Yes, I think.
So 2 years back, we didn't have this much liquidity. We have that liquidity now. So, and if you have a copper ETF, that will add to the liquidity. And then it's sort of a self-fulfilling virtuous cycle from there. To give you an example.
No, I think it's very important because this global integration, given that we do import fair bit of commodities, we are linked therefore to the global prices. That's one part of the story. But you need to hedge. You need to have access to global prices, global markets, and many of these. So I think it's commercially important, and it's from a trade perspective. But I think it's equally important from an investment perspective because you're getting very specific risks. I mean, we've seen even within bullion, we've seen divergence in price performance of gold versus gold jewelry stocks or gold mining stocks. I mean so if you really want exposure to that commodity, the proxy through equities is quite imperfect. So for many investors, I think there is a need to offer the commodity directly and also the value add which comes through a company which is present in that same sector. So I think I agree with you. I think there is a need for more products in this space which addresses because that will, I think, also drive in some sense the retail participation in some of this, just because you have a more should we say comfortable vehicle.
Yeah, no, absolutely. For example, I think there's also openness, and we've experimented on one of the commodities to look at what we call delivery unit as being different from a trading unit. So delivery unit, of course, is determined by the physical market, right? There is a container, there is a bundle of copper, it has to have a certain, tonnage associated with it for the respective brands. However, the trading unit over time, should not go out of the hands of somebody who wants to participate in that market, including a SME participant. I mean, leave alone retail, right? Even if you talk of an SME participant, if one unit is in, like tens of lakhs, then they are not yet there in terms of how they can utilize this market. So that sort of fractionalized trading unit, which we've got in nickel now, has actually proven good results.
Can we unpack that a bit more? I mean, this is very important because obviously the more granular you make it, so how do you manage the risk of delivery? I mean, you can't deliver.
No, so there are some mechanisms. Yeah, there are regulations and rules around it. Once there is enough liquidity, then it's about how you're able to, pull sort of 6 trading units and aggregate it into one delivery unit. So once there's enough liquidity, that multiplier of 5 or 6 or whatever it is fairly easy to manage. And in that one-off that it happens, there are mechanisms for auctions and so on, which will give back a fair price.
Okay. That's really interesting because I think we've seen the ETF success really proves that investors do like being able to take exposure to an index or a market.
And it's very good, no, because you're able to do it by actually outsourcing the knowledge work to an expert, right, in the fund house. And they are able to benefit from the asset class.
Yes, which is another thing which is another thing I would like your comment on, and maybe you have thought this through better than I have, which is that for a while now we've the regulations have permitted asset managers and portfolio managers to invest in commodities through mutual funds or the portfolio management structures. What is the traction there? Are we really seeing interest coming from professional managed accounts in commodities? Yeah.
No, very much. I think certainly the mutual fund has seen a phenomenal success when it came to equity and the whole equity, gamut
yes.
of what got covered. And we are seeing that with, how the Indian markets are also holding up on the back of that. So enabling provisions have started to come in from the regulatory side. I think if you look at, for example, multi-asset funds, SEBI is really opened up some spaces of consultation with the industry. So, mutual funds can now start structuring with more flexibility than perhaps they could in the past, including AIFs and SIFs and so on. So I think it will be, as always in the Indian market, calibrated. It's not going to be, let's go and do everything in one shot. But as more funds come into play, they are able to do certain things, then more regulations will open up and so on and so forth. So I see that playing out. However, what is very important is, a capacity building.
Yes.
So people who build the expertise, who bring that sort of deep knowledge of how the equity markets have worked and how funds have been put together, and what do you sort of play that out. So a whole generation of CIOs and fund managers have grown up in a particular way, so to say, right? So that needs to expand and embrace this new space, and we've got a role to play there as well.
We take a little different tack, and this is important from the current context of how the commodity markets are playing out. And it's why we can discuss in the context of the current West Asian situation. The reality is, for the last 5 or 6 years, we have had multiple shocks to global supply chains and disruptions to commodities markets, whether it is, during COVID, and then the Russia-Ukraine situation, and now, and so on and so forth. There are multiple such geopolitical shocks to commodities markets and, supply chains and so on. How does that play into commodities exchange? I mean, what is your take from sitting where you are, that how does this play in terms of the need for an exchange of this sort, and how should investors view a commodities exchange or a commodities platform as a way to manage some of those risks?
So if you, as you rightly pointed out, and I'll just sort of expand on that, let's see where we are on the demand side for commodities in the country. And I'm just taking some of the trends that are, well known. If you look at renewables, which is really what we are doing with solar power, India has discovered the sun. So this secret sauce is really powering up our electricity and, power. And, it's been all over the newspapers. This summer of 2026, we've hit new highs every day. 260 gigawatts per day kind of peaks are being spoken about. And increasingly, from many years back, about 2 to 3% that solar contributed into our energy production. Today, we are hitting the double digits as a country. And a lot of this has happened in the last 2 years. Plans of 500 gigawatts of supply coming from solar, all of that seem very likely, and we are sort of treading on the right paths there. Next would be what we are doing on the back of that with EV. And in the current environment, it's becoming more important to de-risk from oil and so on and so forth. What we are seeing with infrastructure, I think India's continues to be in the midst of massive spend on infrastructure, on construction, data centers, right? And what that's going to create, manufacturing, be it right from sort of silicon and wafers to electronics and the whole lot, and everything industrial consumes energy. In fact, 30% of all costs associated with any factory or industry that runs is actually energy.
Yes.
So this is the demand side, right? And then if you look at the supply side, yeah, I mean, solar is great, but our demand is not really being fulfilled by solar. Still, we have peak demand in the evening, we have night demand, all of which, solar batteries are still not up to the mark there. So if we look at power, if we look at really the geopolitical environment with tariffs and sort of trade routes going awry on the back of that, the war and curtailment of, again, supply chain, as a country having to discover new supply chains and sources, and each one of these disruptions causing price uncertainty. And per se, even if we didn't have all of this, and if we simply looked at what is demand supply, just globally, and my numbers may not be perfect, but if we are talking of about 28 million tons of copper demand, the world today refines and produces about 20 to 23 tons. So, and year on year, the projections are such that this deficit will actually increase. So, we are talking of a inherent supply demand gap. And then you overlay that with, sort of geopolitical environment playing out, and overlay that with war environments that we are in the midst of. So I think there's never a more important time for a commodity derivative exchange to play a role.
This immediately raises one question with me, that if you're a retail investor, how do you stay on top of all of this? So it seems like, apart from everything else, there's some geopolitical event, overnight events, global markets, and so on and so forth. So what would you suggest that investors should do just to stay on top of news related to commodities and how they may want to sort of manage their risk?
Yeah, I think number one, of course, I'll turn it towards the fund industry first,
Right.
to say that the more we have products which retail investors can participate in, it sort of takes this need out of the retail investor. So that's a sort of easy approach to take. But I think there are retail investors who have built the knowledge and certain savviness in how they look at certain commodities. And perhaps for a new investor, it's not about trying to gobble up all of this in one go, but pick a commodity, follow it, understand the dynamics associated with it, and that's where I think the smaller trading units, etc., help. The product is now deeply embedded and widely available with all the retail broker members, digital brokers. The experience has been aligned to what typically a equity investment experience is. The ledger books are common for many of the broker members. So really retail, so a lot of friction that was there in the last year or so has been eliminated. A lot of user experience, synergies and consistency has been created. But picking something and sort of going with it and going with the flow probably is the best way to look at it.
So start small, start with one commodity, learn as you go. And
Yeah.
How much should we pay? As let's say, for example, if I'm an investor and I'm looking at not.
And I just want to add there, you'll be surprised when I speak to investors that actually, they are not unaware.
Right.
Yeah. And it may come from something their family was involved in. It may come from something they, grew up with. And I'm not talking of the typical urban sort of, individual who maybe has a very textbookish exposure to life. A lot of people have a very instinctive and natural exposure they've had to some commodity or the other. So those are also good sort of natural starting points for people.
I think that's a very important point from a development of the market, right? I think it's just getting people to be aware of the fact that you have these risks going on in your business or your life, and here's a way to hedge or manage some of that. The investors who typically that we talk to are slightly longer term, so they're not necessarily only looking at it as a way to hedge money or next month or the month after kind of. They're looking at a little long term in terms of trying to be able to build a portfolio. How much attention should they play to the daily noise around these geopolitics or commodities, etc., etc.? How much is it that they should take a portfolio approach and say that this is part of my portfolio? Or is there no answer to this?
I think the answers are the same now. Whatever the asset class is, the answer is the same. I think the outlook should be longer term, sort of being very opportunistic and doing something today and tomorrow, etc. I think at least the principles of investing continuously guide and advise that those are not very prudent approaches to take.
Perfect. I want to sort of spend a few minutes. We've had one question I asked you about your previous roles, etc. But this is of interest to a lot of our audience who really likes understanding leaders and the way they think and how they've built their career. You started, I think, with banking, and then I think, developed specialization in cards and payments, and I'm assuming that's why you took that up. But walk us through a little bit of that journey, your own personal journey, in terms of how you've moved this within financial services, but across different sectors of it.
Yeah. No, that's interesting, and I think I've always been excited about what you can do with technology, and coming from a sort of engineering education in a truly, I think that technology curiosity, has always been a part of what has driven me. So in whichever role I've done, I think I've sort of grabbed and grappled with what's the role that technology can play. Whether it is, I remember I was in customer service in Citi early part of my career, and then I was like super keen to do the whole, CRM, which was not so much of a standard, in those days. But each one of these experiences just gets you more comfortable, gets you sort of challenged, experimenting, but always looking at how we solve the customer or the user's problem. And I think if you look at various roles in banking, and these have been around product, transaction banking, how do you look at organizing a banking product and a service? There's no real touch or feel. Everyone says, I open my app and I make some transactions. What's the big deal? What is the product here? What is the service here? But actually aligning that user journey, making that seamless, and having technology to play that role has always been that that wow factor. And I think that's what played out in NPCI as well. Start with the user, start with the end user, and solve a real problem, eliminate friction, and create the kind of approach and method while still having that innovation and edge available with the market participant. So in our case, for example, with MCX, it is to work with the ecosystem, which is all our members, right? Member brokers, because they take the product to the market. They take it to institutions or hedgers, large corporates, SMEs. They take it to retail through physical distribution channels, through digital apps. Working with them to co-create these products, working with them to really create a joint success parameter here. So I think these have been defining factors and common threads that have actually not made this journey as unique as it seems from outside, or as different as it seems from outside.
No, I see the thread running across, and it's very interesting that you put it in this way. The obsession with customers and probably with digital and technology, because that seems to be the kind of driving force here. But digital technology, data, every day, I'm assuming you said, look at all of this stuff. What do you do outside that? What gives you your kick in life outside the data and sitting every day looking at spreadsheets?
Looking at spreadsheets. Actually, I look less at spreadsheets. I interact more with people. So outside of work, if that's your question?
Yeah, in a sense it is. It could be outside of just the digital and technology part of the work, but what is it that?
So within work, I think I'm all over the place. I'm actually in every part of what we do.
Sure.
And I think I get my energy from interacting with people, with market, with customers, with users. I think the more you hear, the more, in fact, I love to hear a complaint, because I think that's an opportunity to really fix something. And I think when somebody complains to you, it means they care. So really that person becomes my best friend for a long time after that. I love interacting with people who ideate. Sometimes you can't pick up all those ideas, but I think listening to the market and saying, hey, why don't you guys do this? Why don't you do that? Have you considered some ABC? These are all huge, massive triggers to starting to orient how we look at what we do next. And many things that you've spoken about today, for example, will also be triggers to that.
On outside work?
Outside work, I like to spend time active. So nowadays it's too hot, but otherwise when there's a chance to go on small hikes, treks,
Lovely.
Just sort of try and
Sit here or anywhere in the country.
We always have the guts. Anything convenient, 1 or 2 hours drive to just walk around.
Is there anything that you can, that you've read or listened to or otherwise interacted which has stayed with you in recent times? A book or a podcast? Or
Yeah, I think there is this, I forget the author, but there is this 100-year life. And I think this whole concept of longevity and what it's going to mean for all of us. So that was very intriguing. And it's not, I think, surprising us anymore. We celebrated my dad's 90th birthday recently, and he's frail but still active and dynamic gentleman. And in that hotel, there was a lady having her 100th year birthday, and then there was a 95th year birthday. I said, "Wow! This is this is real, right? It's not a book anymore." So how do we think of our life? How do we think of even being engaged intellectually and engaged at work and all of that through this lifespan? I think is going to be a very different world. So I found that very, very useful and interesting.
That also, for example, for someone who's, let's say, starting off in their career very early, they may be looking at to say that, I've got 30 years ahead of me. But maybe the reality is they've got 50 years plus ahead.
50 years, yeah.
So how should people look today, let's say the young folk of today who are probably in their 20s, maybe getting to 30s, how should they look at developing their career? So what, do you think they should change their thinking?
No, absolutely. I think, again, there's been research that now says that when you look at your youth, youth earlier, probably we would have said youth 18, 19, 20, whatever, right? That sort of age zone. Is saying youth is 25. And that's true because most people are actually still getting themselves educated. There's no pressure to start earning and so on and so forth. So some of that thinking is changing, but it's not just thinking. It's the reality that, if life is longer, then you have more time to establish your early years, and you don't have to hurry through, striving for early success. I think it just burns people out. It's okay to have a calm journey as long as one is happy and passionate about it. So I think when we think of longer lifespans, that approach will benefit from changing.
This is a standard question I ask all my guests here, which is something about you that no one knows about. What would you say? Something about you that, well, not no one, substantially no one knows about.
I think I'm a fairly open book. So I'm an animal lover. So always had a nice big German Shepherds in the house. And it's one of my sort of passion areas. Probably that.
Perfect. Sounds great. My guest has been Praveena Rai. It's been a fantastic conversation, Praveena. Thank you very much. And I hope you all enjoyed it. I hope there are a lot of takeaways. I did have a lot of takeaways from this conversation. Thank you for being with us. Thank you, Praveena, for being on the podcast.
Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.